Yes, good afternoon, everyone. This is video 2 on this course about trading the synthetic indices or AMF's price action or technical analysis course. This is actually applicable in every financial market. So you don't need to fret out, okay, why is he using um, um, the index market? This is also applicable in the forex market and the crypto market as we proceed or as we progress. Other videos concerning analysis on other markets will actually be duly done. So now this video is on calculation of pips. This is in the index market. This actually confuses many people. Like many people don't actually know how to trade. And I think that is one of the downfall or the pitfall of people trading the index markets. So I feel like this is one of the things that causes issue or losses. So now we shall be using the VIX 100 for this video. This calculation is actually universal in the sense that it is applicable to all other index. It's applicable to all other index. So now, this now, I already identified some of the salient points. This is take profits. Our take profit on this trade is an arbitrary trade. So I'm just using this for an instance. This is our entry. Definitely for all your trades, you must always have a target as well as a stop loss. Definitely very important. So our entry is at 6121.3881. Then our stop loss is at 6067.4316. And our take profit is at 6320.72. All right. So in order for you to calculate your to actually get the calculation of your pips, this is how you do it. For your risk, which is like your calculating the points in or the pips in index market is slightly different from the traditional forex market. Now look at now, our entry was at 6121.3881, and our stop loss is at 6067.4316. So now, now to get our stop loss calculation of our stop loss pips or points, we'll actually be subtracting the entry value from the stop loss. Now, the reason why our entry is bigger than the stop loss is because it's a buy signal. If it was a sell, our stop loss would be above our entry. So now we are going to subtract our entry and stop loss. So we have 6122.8669. So 6122 points. Sorry, points 8869. You need to add the decimal point to get the actual value, so that this will actually help you determine the accurate value or amount you'll be making or amount you'll be losing if the trade goes against you. So now we have our stop loss, which is at 6067.4316. So we subtract this minus 6067.4316. All right, so here we have 55.4553. In the normal forex market, this would be our pips calculation. Like this would be our actual value. Okay, it would be that it is 55 pips. But in the index market, every point, like if you are calculating for maybe price moves from maybe 6,000 to 6,001, maybe 6,000 to 2010, you have to divide such movement by 10. For instance, now let's say price move from this 6,067 to 0.4316 to 6,100. You subtract 6,100 minus 6,067, 0.4316. Your answer, you divide it by 10. So that would be your pips. So in this case now, our entry minus our stop loss, then we'll divide it by 10. Sorry. 5.55 points. After we calculated 0.4. So we divide our answer, our entry minus stop loss value by 10. So that will be divided by 10. So that will be 5.54553. That is the number of pips for our stop loss. 5.5453. Okay, 5.4553. Let me note it down. So that will be, sorry, SL pips 5.5454553. Sorry. 5 points. Yeah, sorry. Our SL pips is 5.54553. So now we entered here and our take profits, because of we are conservative, and then okay, after doing something like this, sorry, I'm coming. After doing, let's assume normal retail concepts. So we decided that okay, price was going to get to this trend line before it may be rejected back and come down back. So our area of value, point of interest, or point of interest is now the opening of the last order block of the previous order block that broke structure. So that is our point of interest. So as it may be, we decided that okay, that was going to be our take profit. Let me remove this. So now the value of that is 6287.7542. So what do? We subtract, oh sorry, I think that is, sorry, I'm coming. Okay, 6290, coming. 62, let me straighten this. Let me get a straighten the trend line. This would give us a much more better. Or let's make it 6290. So we have a straight trend line. So now let's assume that our take profit is at 6290. So what do? We subtract to get our take profit pips. Our take profit pips, we subtract 6290.00 minus 6122.8869. So what do? 6290.00, there's no need to add that, minus 6122 .8869. So now we have 167.1131. This is the point in which price move. If price get our take profit, this is the point, not pips, the point. Please take note. That is the point price moved. To now get our pips, because the reason why I have to say this or I have to tell you guys is because we don't use the point to calculate our profit with lots of using. We use what we use is we use the pips, not the point. So we just divide it by 10 again, the way we did it for the stop loss. So we divide it by 10, divided by 10. So now we have 16.71131. That is our take profit pips. If price will get there, that is the amount we would actually be gaining from this this trade. That's the amount we're gaining from this trade if price should get to our TP. So let me just do something now. So currently price is at 6213.24. That's where price is currently at. Let me just use 6214.00. And then we entered at 6122.8869. If you want to calculate the number of pips price has moved, what you just do is just 6219.00 minus 6122.8869. So that is 96.1131 points. But for pips, it is actually divided by, you divide it by 10. So that will be divided by 10. So that will be 9.61131 pips. So I hope that is actually understandable enough. So let me just write the take profits. The take profits, which is 6290 minus 6122.8869. So we have divided by 10. So that will be 16.71311. So I copied that already. So that will be TP pips. So there you have it. So those are our values. Oh, sorry. So these are, you see that this is a very, very nice risk to reward ratio. If you should calculate, I think it's about over like ratio 1 to 3. It's over ratio 1 to 3 or close to ratio 1 to 3 or about around ratio 1 to 3. So this is a very nice trade. So now, this is the first thing you do when you want to take a trade. Okay, this is the pips, this is the take profit pips and the like. Now, we all know that price may not get to your take profits. It may not, it may become invalidated, maybe on the lower time frame or something. So definitely, this is how you calculate it. Maybe before you want to take profit, before it gets here, you want to get out, you want to play safe and you want to take profit. So you just do this, you calculate your number of pips and the lot size you're using. So going to the lot size usage now, every index has its own minimum lot size that you can use, every one of them, because it is much more, some are volatile. I already explained it in the video. Some are volatile while some are not. Now, of all the indexes, you can see this one moves very fast. The volatility index, in terms of volatility indexes, the 100 moves very, very fast. So, judging from all this, the indexes, they all have their minimum lot sizes. For this instance, the volatility in the indices 100, the least lot size you can use on it is 0.20. That is the least lot size. And then from in volatility 75, the least lot size you can use is 0.001. For VIX 51X, the least lot size you can use is 0.005. So it varies. There are some of them that are less volatile. The least lot size you can use is 3 lot size for them, like VIX 50. The minimum lot size you can use is 3 lot size. So now, from our basic knowledge of forex, the least lot size in forex is actually 0.01, followed by that's the micro lot. The mini lot is 0.1, which is the mini lot. Then the 1 lot size is the standard lot. That is the minimum of those types of lot sizes. So now, yeah, we notice that we have less than that, where we have 0.001 and 0.005. In the traditional forex market, we have scenarios where, or it is set already that 0.01 lot size actually represents $0.1 per pip. So if pip moved by 10, if a pip moved by 10, what this means is that if you're using 0.01 lot size, it means you're actually making just $1 on the trade. If you're using 0.1 lot size, this represents $1 per pip. So if it moved by maybe 10 pips, this means that you'll be making $10 on that trade. For the 1 lot size represents $10 per pip. So if it moved by 10 pip, you'll actually be making 10 times 10, that's $100. Sorry. So now, moving on. I already made mention of the fact that on VIX 100, the least lot size you can use is 0.2. If 0.1 lot size represents $1 per pip, definitely 0.2 lot size will represent $2 per pip. So now, on this trade, our stop loss pips is actually 5.4553. That is our stop loss pips. So in order for us to get the amount we would actually be risking, and we will probably possible scenario of us making, we just use our SL pips. You need to follow due procedure in order to actually know the amount you'll be risking and the amount you'll probably be making, or the amount you're actually running. So now our SL pips from our entry, after we've calculated the whole thing, is now 5.5443. So what do? We just we calculate it with our lot size value. So now I said, assuming you want to use the least lot size on indices, on this volatility 100 indices, what you do is, since the least lot size you can use 0.2, that means, which represents $2 per pip, that is the least lot size you can use. And now we're having 5.54 pips, 5.54553 on our trade, which is our SL value. In every trade you want to finance, you need to focus more on the SL, the risk you are willing to, you can afford to lose, before you now think of take profit, because price may not get your take profit. You may not close the trade at ratio 3:1. You may take partials and it may not be more than up to 3:1 that you actually projected to make. So this should be your major concern. If you've not moved your stop loss yet, your risk remains the same. So from your entry, if you've not moved it yet, it remains the same. If you've moved it, you do the same calculation, you get the number of pips. So if price comes down again, that's the amount of money you're going to make. So I'm going to show you how to calculate the pips now. So now here we have 5.54553 times our least lot size, that's 0.2. If I use 0.5 lot size, it means 0.5 means that $5 per pip. So it will now be $5 times 5.54553. But because of we are using the least lot size, it will actually be $2 times 5.54553. So you would go and calculate it now. So times or multiply by 2. So here we have it. Would actually be risk. Our risk on this trade will be 11.09106. That would be your risk. So that from your entry, let's say this trade didn't go as you planned. It didn't go as you planned. Maybe it now hit your stop loss. This is the amount you'll be losing on this trade using the minimum lot size. This is the amount you'll be losing on this trade using the minimum lot size. So we already got that, okay, our risk is 11.09106. If you should move your stop loss, let's say as this trade is here now, and now move our stop loss to entry. We move our stop loss to entry here. We will not be losing anything because we now have a risk-free trade whereby if price should come down, it will close at our entry, which will be like 0 pips, no loss. But so far you've not moved it. And even if you move it, you keep on moving it, you still need to calculate your entry minus the place where you place it now. So this will give you the actual, when you divide it by 10, you calculate it by the lot size you use, the lot size value in which you use. This will give you the idea of the amount you're going to be losing. All right. So now for the take profit now, for our take profit, let's assume I want to leave the trade. The trade is going well and then, or you actually want to close in this place now. Let's first use the take profit. Our take profit pips is 16.71131. So what do we do? Since we are using the least lot size, so we just go there and we calculate the amount we're making. So multiply by, since we use 2 lot size, so that will be 2. So that will be 33.42262. So that will be the amount we'll be making on this particular trade. That will be the amount we'll be making on this particular trade. We'll be making 33.42262 if price get to our take profits or our point of interest. The market is not for us. You'll notice how I've been saying that if price gets to our point of interest. Now, there are some salient things you need to know. Your account size. For someone that has a little account, maybe like $10 account or less, as you can see from this trade now, our SL pips is around 5.54553. And if you are using the least lot size on this 100, it would actually be that our accounts will not be able to hold the trade. Definitely be able to open the trade. But the only problem is that price will now close. Let's say price now start coming down to your stop loss. price will now close at the point where the SL, the pips calculation and the lot size get to 10. That is, you're now losing $10 now. That is where the trade is going to close for you, and then you will see that that's where you see that, okay, I've blown my account already. So with that in mind, if you are someone like that, definitely you will try as much as possible to avoid some really risky trades. And then when you're able to see, when a trade is going in your way, you just try as much as possible to secure the profit, or you place your trades at break even. So this scenario, or I didn't mention it. Like for instance, if you want to close the trade here, to get the number of pips, you just do the same thing. The same calculation, your current price minus entry, you get it, divided by 10 times the lot size value you're using. If you're using 0.5, that will be $5 times your calculations. Yeah. If you're using 0.2, that will be $2 times your calculation from it. So that will give you the actual value of the amount you'll be making at this point. So this same thing is applicable to every other indices. The same way, the same calculation is applicable. The only thing different is they have different values, different points. That's the only different thing there. So please just take notes, and then use this wisely, because, and also ensure that you calculate things like this. You don't notice that you're blowing your account without actually having an idea of, or you now start wondering where is it coming from, when you don't even have the proper knowledge to actually calculate these things. So I'll see you guys in the next video. And then sorry that this one was very long, but this is a very important topic, and which needed to be addressed duly. So take care, guys.